All right, a very good evening. Right now it is 5 o'clock Indian Standard Time and it is 3:30 in the afternoon Dubai Standard Time. So I hope you all are having a great day. Hope you had a great start of the day and I hope it's going great till now and even till the night. All right, so it's been 5 o'clock Indian time. We'll give you another 5 minutes more so that more people can come in and join our live streaming session. So please, guys, keep joining, enter into our live streaming session. This is the third live streaming session of today by me, your one and only Harsh, and we're going to talk. There's, quite a lot of things to discuss. So, all right, it's 5. Come on. I need more people to join in. For people having a great day, can message me in the comment box and say how is your day? How is it going? Are you excited for this particular live streaming session that we're going to have now? So, write your thoughts about it. Tell me more about it. All right, so I hope you all are having a great day. It's been a wonderful day, correct? I mean, this is the third live streaming session that has been taking place, and it's been wonderful. It's been beautiful. People have been, quite excited. They're optimistic. They are interested to know, more about the Indian share market and even, fundamentals, technicals, what are the central governments talking about, what are the policies in place. So there are so many things to talk about. So as you can see, the Indian share market has closed for today. Whew, phew. So today the market is closed, and we are going to talk more about the closure in terms of what has happened during the day, what went, and how the market has closed. Correct. So yes, the market has closed bearish. Correct. So the benchmark equity indices, BSE, Sensex, and the Nifty 50. They had early gains. Just a second. My bad. 1 minute. Yeah. So it's shed 318 points, right? Or 0.39%. So if you look at the percentage, it's 0.39. Not that significant, but still bearish, still lower compared to the opening of the day. So people are still skimmish about it. People are a little pessimistic, I would call it as. So people like, no, Harsh, today it's still closing below. The market sentiment is still bearish and all that. Yes, it is. It might be currently for this tenure, but for the upcoming days, weeks, the short term coming future, we expect prices to continue up. So there are companies which have gainers and losers, but apparently we have interestingly the auto and the IT indices, IT, yeah, information technology, your computers, your gadgets, and your network solution company based companies. I mean, they were among even they closed lower. Private consumer durables, healthcare, even apparently even these companies for today were not too clear about direction, and they slightly closed lower. But there's a caveat in this. We have financial services, reality, as I had discussed in the previous live session, that the real estate sector, based on the loosening or easing of the government policies, it gave the real estate sector, the freedom or the breathability, to make an aggressive, influx of funds for their projects, for construction, for management of real estate services. So these are the two and three OMCs. So three sectors have been managed to get some gains at around 0.55%. Not much. I mean, if you see the overall, it's 0.39 negative for the index, right? The main BSE. And then you have these three sectors, which have closed slightly higher. Now, please understand, the markets are going to go up, down. At some days, they're going to close bullish. At some days, they're going to close bearish. At some days, they're going to be mediocre. Like, yes, they are eventually going to be closing as bearish or bullish. But, when the open and the close price, like I said, the percentage for the BSE Sensex's close was just 0.34%. So it's not that significant. It's very, minor. So today has been more of a sideways, yes, bearish, but slightly bearish, but still more of a sideways market. Now, I need to utilize this time to get more attention for our beautiful viewers about the technical aspects of because fundamental aspects, when you look at the balance sheets or the fundamental news events and everything, you see that okay, numbers, percentages, good percentages, bad percentages, but people are like, Harsh, those percentages or that financial data is kind of cumbersome. It is what do we call it as? It is, like kind of annoying to the brain. Like, why so many numbers and all that? And I had also mentioned in the previous, live stream sessions that the technical part, the charts, they discount everything, but in the sense that they show everything what the financial data has showcased, So the financial data for the last couple of months to a couple of years has been, towards the depreciating values. The numbers are falling down. You can see it on the charts. The candles are going to be bearish. If the numbers are good, they're doing well, the ROI, ROEs and the PE ratios and everything are positive and are appreciating in value, it is going to be showcased on the chart as well. So, since the market is closed and we are not going to talk more about the Indian share market, I mean, we are going to talk about the Indian share market, but from a technical perspective, correct? So, let us begin. But before that, let me give you a quick introduction for all our new viewers. I'm Harsh. I have been associated with the financial markets for almost 8 years. I mainly deal in forex, commodities, and US-based indices such as S&P 500, Dow Jones 30, and I'm currently interested even in the Indian indices. We have the BSE, we have the NSE, and the individual stocks as well. We as a company are providing you with hot stocks. These stocks are basically provided by our team of analysts, very experienced analysts. These analysts have hardcore experience in technical analysis, financial analysis, and we combine the two to give you some of the best upcoming trade opportunities. So whenever we do come across any particular or a hot selling or a hot stock that we want to buy or sell, we will mention it to you in this live stream. So it's very important for all you beautiful people to be a part of it so that you can get money out of it. You can make money out of it, correct? Because we do provide our hot stocks as well as we provide, education in financial education, through a technical education, how to read charts, what to look at charts, how to decipher the data or the meaning behind what the charts are trying to tell. So it's a culmination of everything. The earlier two live streaming sessions have been more, based on what are the stocks performing, how are they doing, how are they not doing, and giving you the hot stock, the hot stocks, the trades that you can also take. But once the market closes, our emphasis start to focus more towards now it's okay. Now the share market is closed since we basically are mainly focusing on the Indian share market. since it's closed, correct? So now we take a step back. We just have a look at what happened on the Sensex, BSE, NSE, and then we come and try to understand from the technical perspective. What are charts? How do charts move? What are the basic components? Since I've been starting today, it's very important for me and to all you viewers that there are going to be a huge variety of people, in our group. So we are going to have people who have no clue about what charts are, what charting is all about. At the same time, you're going to have people who are, yeah, I'm very good in charts, I know everything. So please bear in mind that I have to make sure that I can, make sure everyone, right from the amateur to the professional, right, all the doubts, or if they have any inquiries, regarding even the basic technical jargons, or I would call it as the basic technical anything. It could be right from, okay, what is a ticker, why is price moving in this, why this candle is green, why this candle is red. So many people are looking at it, and most of you are aware about it, but there might be few who might not be knowing, and they are curious to know about more about, financial trading and everything, technical analysis, correct? The term used is technical analysis. So we are going to focus more on that so that it can help you to, in order to understand, or elaborate, or basically polish your technical analysis skills. All right. So coming back to TradingView, TradingView is our savior, correct? I mean, TradingView is one of the best charting platforms that I've come across, and I'm pretty much sure that you too would be using the same, because it's so, efficient and easy to use, and it has everything, right from Indian stocks to whichever stock you look at, everything is there, correct? All right, so opening the Sensex. Today's day, right? Like I had mentioned, based on the theory that I've given you, that price had closed by 0.34 of a percent. So based on the candle, it is bearish, like I had explained, but it is still bearish, but small compared to the other candles, correct? Now, coming to the lower time frame, till now I have been talking more about the monthly, the weekly, and the daily. Now we just come a little lower, to the lower time frames. I guess most of you would be aware that we have, ranges all the way from 12 months to a minute, or even to second. So we will get into these things step by step, slowly. Oh, Sagar in the house. Thank you, Sagar, for being and watching our lively show. Thank you, Sophia. So Sagar has, do analysts usually pay attention to gold? Yes, Mr. Sagar, gold is important because gold is a commodity that is everyone talks about. Where's the price of gold going? And the main thing about gold is a commodity that doesn't lose its value compared to silver, which is abundantly available. So, and gold can be used in jewelry, in semiconductors, in computers. I mean, it has a vast use of materials, correct? Usages. So we do look at gold, but right now, because we are focusing on the Indian share market, we will focus more on our indices, Indian indices, as well as individual stocks. All right. Now coming back to what Sensex is all about. Sensex, like I said, 0.34% negative, right? It opened and it closed, but it's very short, small compared to, the other candles. Yes, there is still bearish sentiment, but nonetheless, it's a small candle. So there's still been a little bit of indecision if you look at the long-term picture, but this is the 4-hour chart. We are going to talk more about this, as in how, like I said to you earlier, I just have to make sure that people are, I'm, I'm able to, accustom even the freshers to the professionals, correct? So if anyone finds that, oh, but I know all this, or I think I know this, or I think I know that, why are you repeating it? It's important so that our community as a whole can learn together, right? It's not a one-man show. I want to spread this information as much as possible to make people more available, or to make people more aware that yes, such markets exist. There are so many things happening, there are thousands of products that people can trade on. And to gain, to ignite your curiosity, and to make you think for your own, whether, yeah, now it makes sense. Maybe I have not been looking at it in that particular manner. Maybe I have been focusing too much in a very closed mindset direction. Maybe Harsh is helping me to, expand my horizon in terms of what the markets are doing, and what are the technical aspects of charting and everything. So, like I had mentioned, we are going to focus more about the technical aspects. Since the market is closed, now our focus turns on to understanding the technicality. So today's session will be more about the basics, the AB series of technicals, correct? I mean, that's the term technical. It's or I would call it as the category of technical analysis is so vast that I can keep talking for days and maybe months, and I might not finish with information. It's so massive, but we just want to make sure that for this particular time that we are together for this particular live session, I want to keep it simple, concise, so that people can understand and it doesn't, go bonkers on their head. All right, so now that we are done with Sensex and yes, it closed bearish, let's move on to the technical analysis. So before that, let me remove the watermark so that it doesn't create a distraction. I have a plain blank page, as I can see. Perfect. Don't get scared. The charts are here. I'm just moving the charts away so that I can get a plain canvas, so I can explain, the basics of technical analysis. Correct. So here we go. Let me start with a candle. Correct. I mean, I could show you an example from the top, but I could show you the examples of candles over here. But these candles are still what we call it as. Just a minute. Yeah, these candles. Let me show you with a theoretical example, correct? So, as you can see, this is a candle, correct? And let me just draw a quick line. All right, so now basically there are only two types of candles which can be seen on the charts. You can see as the one above, either you have a green color candle or a red. Yes, you can change colors, but there are only two types of candles. My main motive is to explain you that. So let me just put these two colors because these are the most widely used candles, correct? The widely used colors for candles. So we have a green color candle, and we have a red color candle. I hope you all understand green means good, means money, means making profits, and red means loss or losing money. So that's why the colors, the denominations of these colors are such, because they are easier to understand. But otherwise people will be like, why this color, why that color? The color is just a symbol. It's a symbology of understanding, easily understanding for the masses, correct? So, one second, let me just change the color. Correct. So we have a green color candle and we have a red color candle. Thank you, Bottle Shakes. Thank you so much. Thank you so much for your kind words. Now, some people can have, remember, TradingView is such a beautiful platform that you can, change the colors as per you can make it pink, blue, orange, but we just want to keep it as simple and as basic as possible. So we stick with the basic colors. Everyone uses these kind of colors, all right? I would say most of us. All right, so a green and a red. A green signifies it's a bullish candle, and the red signifies that it's a bearish candle. But before you get into that, it's very important to understand what exactly is a candle, correct? So candles, basically, the term candlestick has been started by a Japanese rice trader, back in the 1800s. So this Japanese dude used to, go to the rice markets, and he used to make it on his, paper, or the kind of fabrics they used to have at that time. So where the price of rice opened, where the price closed, And based on that data, he used to draw these kind of sticks, with these blocks. So as you can see on my screen, he used to draw something like this. It resembles like a candle, correct? You know how a candle looks, right? It's a candle, the body, and a wick on top. The thing with our candlesticks, technical candlesticks, or we just call it as candlestick patterns, it's we have wicks on both sides, and I'll get into that why. So we have certain denotations, right? We have certain, what do we call it as, terminologies that we need to be very clear about, right? There is a reason for every terminology. There is nothing random over here. Everything is structured. Everything has a meaning to it. So as you can see, I'm just writing down the denotations for you so that you are aware about it. I'm pretty much sure many of you might be aware about it, but it's for the newbies over here that I have to make sure that they are also on the same page, correct? So, this is a very basic understanding, but it's very important to know it because many people, all they do is they want, like, let's get into the charts, let's click on, buttons to see what will price do, where will price go, let's buy, let's sell. That's good, but it's like you're trying to fly a plane without even understanding how a plane flies. It's eventually you're going to crash it at some point of time. It's very important for you to start from the base. Whenever a building is made, they don't rush. They might rush the construction of the building, but they can never rush the construction of the base. The foundation is very important. Once your foundation is strong, you can, increase your momentum. You can become quicker in learning. So, coming back to the basic candlestick terminology, it's very important to understand, right? So, a green candle, it's like very important to understand the terminology. We have only four, not too many, but just four. We have the open, we have the close. Open is basically for that particular time frame. For example, if you can see my mouse, here we have different time frames, correct? I mean, we don't need to get into ranges, but I'm just talking in, which majority of us use. We have the monthly charts, which is denoted by 1 month. We have the weekly charts, denoted by week to 1 week. We have the daily charts, and so on and so forth. We have the 4 hour, we have the 1 hour, we have the 15, the 30 minutes, the 5. So every candle has a particular time period. It opens at a particular time and it closes at a particular time. When a candle opens at a particular time, it's called as open. Now, open is fine, but when a candle closes, that is what is to be given importance because price that can open, but where it closes determines the color of the candlestick. If the price closes above the open, all right, let me make it a little more clear for you so that it's easier for you to understand. I'm going to use an arrow for my explanation so that you can understand and be with me, stay with me. So this is the open, right? If the price of that particular candle closes above, you see where I've written close. If the price closes above than the open, the general terminology is a green candle, or we call it as a bull candle, correct? But during that time period, there might be a time phase where price would have, has gone all the way to this area. You see, that is why we have these wicks at the corner. Wicks basically signify where during that time period what price has been doing, whether has it been very bullish, very bearish. So during, for example, let us talk about 1 hour, correct? So if you're talking at 1 hour, okay, and right now the time is 5:30 India time. So let's put a hypothetical scenario. We're going to talk about the candle opens at 5, all right, 5 p.m. Oops. Because it is a 1 hour, you see on the top left corner, it's the time period, right? So since it's 1 hour, the candle will open. Remember that the timing will be specific. It will always open at fixed. It will like depending upon your time location, it's going to be a little up and down, but in general, let's keep it simple. So for the 1 hour time frame, the price for the scenario we are considering, sorry, we are considering from 5 p.m. to 6 p.m., right? Because we are looking at the 1 hour. Now, during this time period, you have five, then it becomes 5:1, 5:2, 5:3, 5:10, 5:30, 5:45, 5:55, 5:59, and 6 p.m. So the time period between that 1 hour, right? The candle starts from here. So the open is going to look like this. Then during that time period, between 5 to 6, the price goes up all the way till here. Then the price goes down all the way till here. But eventually, once the candle closes at 6, wherever the price is at that time, that is denoted by the close, correct? So the low and the high basically signify the range, the extreme range or the extreme corners of where the price has gone. So price had opened here. For example, at 5 p.m., the price started to go up, 5:10, 5:20, but by 5:30, for some unknown reason, price starts to go negative below the open price, then price comes back again, and then it closes up, correct? So you see the price has moved throughout the entire day, sorry, during that entire time period. Remember, for 1 hour it's going to be, between 1 hour time frames. If I go to a 4 hour, it's going to be a 4 hour candle. If I go to the daily, it's going to be from the starting of the day to the end of the day, right? So every time frame has its own uniqueness, correct? Now we're just trying to keep it as basic and simple as possible. So coming to the 1 hour, for example, this typical or hypothetical scenario that we are talking about, that price opens at 5 p.m., closes at 6. So if the price has opened at 5, it's going to be here, correct? Now during that time, as I mentioned again, price went up, then price would have gone down, then price eventually again became, green, then it closed exactly at 6. Whatever the price is, the candle closes. So this is how you have a bull candle, correct? It's called as a bull candle. Why bull? Because whenever a bull attacks, it always attacks from down to up, like it scoops you out from the floor. So that is why it's called as a bull candle. A bull candle, correct? Bull, or people generally refer to it as, just in simple terminologies, people would just call it as maybe green. Oh, Daniel, thank you so much, Daniel. Thank you so much for your kind words. I'm trying my best to keep it as simple as possible because I want, even the newbies to be, aware of the potential the markets hold. But please understand, the financial markets are such that it's like sitting in a sports car. If you don't have a driver's license or if you do not know how to drive a car, it is very risky. If I give you a Ferrari or a Lamborghini Aventador, you get my point? You're going to crash it. So very important to start with the basics to understand, okay, how to drive, what is the steering wheel, okay, what are the indicators, okay, where is the gear, okay, where is the switches, okay, how do I drive? You see it, it's a step by step process. Even when we were kids, we were not born, we were not born out and we started to run, correct? It took us years. Gradually we started to walk on our 4 feet, on our two hands and on our 2 feet. Then slowly we started to get up. We used to fall, get up. So it is a process, it takes time, so it's important. And that is why I want to keep it as simple and basic for today, because people need to understand, or let me say, for people who already are aware of this, it's just like a refresher. And it's important, right? Who doesn't need a refresher? A refresher is basically a revision, a quick revision, so that people might have forgotten some important information during for whatever reason, but now they'll, oh, okay, now I remember why it is like this. Okay, now I remember why it is like this, correct? So coming back to our basic terminology, so a candle, correct? A green candle or a bull candle, it's simple. We have when the close, correct? When the close is higher than the open, it's a green candle. Now similarly, a red candle, correct? Now it's the complete opposite for a red candle. What was green candle? The price opened lower and it closed higher. Now for the red candle, or it is even called as bear, bear candle, because opposite to the bull, when a bear attacks, it's always, it uses its paw. So when it uses its paw, it's always from the top to the bottom, right? He hits like that. He will never hit like that, correct? A bear, sorry. So when a bull attacks, a bull will attack from its horn, from down to up. And when a bear attacks, it's always from up to down. So that is the analogy or the concept, why people call it as bull, bear, or the green, red, or buy, sell. So there are so many, terminologies people use across the globe, but the main professionals use only two terms, which is called as bull candle, or bear candle, correct? So let me just quickly type it over here. This is called the bear candle, and you can even call it as a red candle, correct? So when you have the open and the close is below the open. So the same analogy I'm going to give you for the time frame. The price opened at 5 p.m. and the price closed at 6 p.m., correct? So it is the complete opposite. The highs and the lows remain the same. It's very similar. Remember, even for every candle, there is nothing it open. There's no fixed open and close. The price is going to, the markets are dynamic, correct? And the markets are eventually represented by candles, correct? So the candles are going to breathe in, breathe out. They're going to move in, move out. They're going to create highs and lows. So similar to the bull candle, like we had talked about, the bear candle is exactly the opposite. But please bear in mind, people generally get confused, and I used to be one of them, where I used to be like, if everything is opposite, shouldn't the low be on top and the high be bottom? People are human beings trying to make even the simplest of things very complicated. So we don't want to make things complicated. It is only about the open and the close, correct? For this, the open was below, the close was above, right? Simple. These are just basic terminologies that I'm trying to use, but eventually, once you get a hang of it, like it's not like you're walking, so you have to remember, okay, I have to put the left foot in front, then I have to put my right foot in front. No, it's now it becomes so habitual that you can, even if you're sleeping, and if I tell you to walk, you can walk. So similarly, the more candles you look at, once you understand the basics, you're not going to keep repeating, okay, the candle opened here, okay, the candle closed here, so there's a bull. Don't worry about all that. Your brain will automatically start to calibrate and you will be fine. Like if you're looking at the above example, you're not going to go through each and every candle to understand what candle, because the color itself signifies, right? That is why we use color denotation, sorry. A particular color, right? If it's green, it's bull candle because prices opened lower and closed higher. A bear candle, prices opened higher and closed lower. So that is the example that I'm trying to explain here. The basic example, correct? When the price opens lower, closes higher, it's a bull candle. Remember how I told you how I denominated or how I demonstrated a bull attacks from below to above, right? So it's below to above, and a bear always attacks from the high to the below. So the bulls attack from low to high, and the bears attack from high to low. That's the easiest explanation, and that is what everyone uses. That is why it's called as bull candle and bear candle. So once I hope everything is clear, this is just a basic example of what bulls and bear candles look like. I am very much sure most of you are aware about it, but still, it's my duty to make sure that I keep even the amateurs or the freshers, engaged to make them understand and to give them that information, because it is very, very, very vital information. People often run, they want to run across and be like, no, tell me how to enter, tell me trading strategies. I can do all that, but it will make no sense to you, because if I don't explain to you the basics, you will not even get the advanced concepts, correct? So we want to take it slow and steady. And like we said, we are having these live streaming sessions three times every day from Monday till Friday. So we have all the time in the world. Why do we want to rush? We want you to come. We want you to be a part of this live streaming session so that you can be more engaged with us. You can learn more about our company. Like we said, we do provide you with hot stocks. Remember, hot stocks. These are the trades that we provide you based on our analysts, and they are the ones who pick. These stocks are handpicked, only the best of the best, right? Because we want to make money, correct? So thank you, Daniel. Thank you, Yasin. Thank you so much. Your emojis, your emoticons mean a lot to me. Thank you so much. I'm very happy and I appreciate the love and respect coming from the audience. Thank you so much. So this was the basics of candlesticks, correct? Now there are basically different types of. We talked about the basic. I mean, I would if I had to give a ratio in terms of the number of people that are using candlesticks, it's around 90%, 85 to 90%. If you click on these, on the top left, where you can see the candlestick, right, where my mouse is, you have many types. You have hollow candles, volume candles, line. You have, so there are many. Most of us, when we go to banks or when the bank, when the banking executives come to us to explain. So look at this. They generally denote it by lines. Because lines are easier to print and less hassle because it just shows a line, correct? Now this line is nothing but the close. Again, now I mean, I think I'm running again, but what it means is it's simple. You just look at the direction and it's easier for a layman or for a newbie to understand. Okay, prices have been going up, so the line is going up. Prices have been going down, so the line is going down. It's very simple to understand, right? But when we when we talk about technicals or technical trading, right? The technical aspects, people either prefer candles or people prefer bars. Now, when I look at bars, bars are like, I did try to use bars, but it gets very, complicated and technical. So we want to keep it as simple as possible. So we will not talk about bars. We are only going to focus on candles, correct? Let me just make a minor adjustment. I want my borders to be black because I like my borders and wicks to be black. All right, cool. So as I had explained below, with all the drawings and the denotations, we look at the real market, right? This is Sensex, the S&P BSE Sensex India. So similarly, that I denoted with examples with the illustration below. You have the same type of candle. The candles are going to be of various sizes, right? Some candles are going to be short, chotu candles. Some candles are going to be big, bade candles. So you get the point. It all depends on the volume. What was the news event at that time? Why there was a heavy fall? These things are not in our control. But what time the candle opens and what time the candle closes is denominated by the time interval. Correct? Like I had mentioned, these are the various time intervals. So for this particular time interval, these are what the candles have plotted on the chart. Now if you look at the other basic technicality, many people they are like, Harsh, why are your charts so empty, like in terms of you only have candles, why don't you use indicators? For everyone out here, I'm more of a chart, a price action trader. So I'm an analyst too. So I prefer to just focus on what is the underlying story behind the candles. I don't, like to put gizmos and indicators because one thing to understand about indicators is that indicators are mathematical formulae derived from data. Now with candle or with indicators, let me just give you a very simple example. I hope most of you might be aware of the moving average, correct? So moving average is a line, correct? Let me just put a moving average, right? So I hope you all can see the moving average, correct? Let me make it a little more thicker. All right, perfect. So, when we look at the moving average, many people, I'm very much sure, quite a lot of you people would be using moving averages, to kind of gauge, to understand, because for people, they want to be quick, they just want to enter the market, so they don't learn the right way. So when they are looking at moving averages, they are like, oh yeah, anything above moving average means yeah, there is bull candle, bull, so bullish, and anything below the moving average, sell, bear, so bearish. The term bullish and bearish basically come from these two candles itself. When you have a series of bull candle, we call it is bullish. When we have a series, like for example, if I have to show you this area, you see how, if you can see the arrow, look how the bear is, it's a consecutive follow up of red candles or bear candles. So we call it as bearish movement, bearish trend, correct? And when price is moving in, when there are more green candles, it will never be, exactly red or green. You're going to have a mixture of two. But the sentiment, the overall sentiment, when you have so many, a series of green candles followed by more green candles, it's called as, combination of bull candle. We just call it as bullish, correct? So bullish movement, bearish movement, correct? When price goes up, I will just type it so it's easier for people to understand. It's bullish. One second. And even let me denote it by the right color. So bullish means green. Green is a good color. Green is a color of prosperity, correct? So bull means yes, making. At the same time, when prices are falling, correct? That time, because it's a consecutive follow-up of bear candles, we term it as bearish. It's very simple to understand right from the basics of what I have been telling you. Okay, what is a bull candle? What is a bear candle? It's simple, you just have to get a hang of it, and then it will be very easy. You will not have to think too much about it. It is only the initial phase where people, including me at one point in time, I had to write it down, like what is a bull candle, what is a bear candle. It's okay, you're learning, everyone is learning, don't worry about it. So consecutive bull candles, we call it as a bullish trend, right? Trend is basically price is moving in a particular direction. Bullish movement, bullish trend, bullish swing. There are so many terminologies, the financial markets are spread all across the globe. So nothing is, like, what do we call it as? Centralized, as in, no, we can only use one term, for one thing. No, every country has, their own terminologies for bullish, bear. But in general, the larger consensus or the larger proportion of people prefer to use bulls and bears because it's simple to understand, correct? Remember the denotation that I said, bulls from down to up and bears from up to down, correct? All right, so when I was talking about indicators, and as I had mentioned, indicators are basically mathematical formulas that are derived from past data. So if I just zoom in, the reason for a moving average, now for we have put in a moving average. Moving average is nothing in simple terms. It is the collection point of the candle closure of not just the candle closure, but you have they have different settings, right? But we just keep it as simple. So we are talking mostly about the close, correct? Otherwise, you're going to have different formulae within. We want to keep it what? We want to keep it simple, correct? So just let's focus on the close. Now, I hope everyone can see length, right? Length as 14, 1, 4, 14. So length is something that we can change. It's a parameter, whether I put 1, whether I put 1000, the line, right? This particular indicator is going to change. If I put 1000, it will disappear because it cannot even take, those many number of candles. Okay, let me just put, for example, 30, right? 30 is a significant number. You see how the line changes, correct? No matter what indicator I put, whether I put maybe 5, all right? Number 5. you see it changes. First, the movement of price had been, the movement of the indicator was huge, vast. Now, as you see, on the moment I shrink the parameter, you see how tight the indicator has been illustrated, correct? So let me just go back to a normal standard number. So this is calculated based on the last 14 candles. Similarly, when I had put in when I put in 30, it had calculated the data based on the last 30 candles for this particular time frame. You see, because I'm on 1 hour, so the last 30 1 hour candles. If I go on to the daily, it is going to consider the last 30 daily candles, and so on and so forth. So when people tell me, why aren't you using indicators, or why are your charts so blank, you are just looking at candles, and the answer to that is simple, my friend, because I just try to understand the story behind the candles, because the candles themselves denote there is a reason why price has been pushed, to the low or to the high. Why a particular candle has been taken out by the opposite candle. So every candle has a story behind it, and I try to specialize myself in understanding that story. The we call it the nuances, the subtleties in how price moves, correct? So everyone, there are so many people out there who have different who are into different types of trading. Some are like, okay, we need, there are many people I've come across, who will put MACD, not McDonald's, moving average, convergence, divergence, right? We all, we have this habit of, for especially this indicator, I'm very sure, and I want you to comment if you have done it before too. Like most of, when people start to use this indicator, remember, guys and girls, there are many indicators. If I the indicator list is expansive, it is exhaustive. It's like there are so many indicators. It's a very good way of enticing people to, like, wow, there's so much to look at. Yeah, everyone to themselves. So when we talk about MACD, it's like MACD, moving average, convergence, and divergence. You can click on the, what you call, the indicator, and it will show you MA series. So we have got used to calling it as MACD. So MACD for us is basically McDonald's, correct? We don't McDonald's to come and sue us, correct? Let's just call it as MA series. So again, even this particular indicator, no matter how well it looks, it kind of, for many people use MACD. I have many fellow traders, who prefer to use MACD, and I respect that, because everyone, should follow what their instincts tell them to follow. In terms of, like, there are, people working in finance, there are people working in education, there are people working in the security forces, there are people working in the government. So it's not like everyone is working in one place, right? Not everyone is a doctor, not everyone is a pilot, not everyone is in the government, right, in the public sector. So what I'm trying to say is there is so much of diversification across the globe. So when it comes to financial trading also, people have different approaches, to how to enter markets, what to look for. But I'm talking from my point of view. So indicators like the MACD, it looks very interesting, and it looks also predictable, because if I put a horizontal line, let me just put a horizontal line, horizontal line, here is the horizontal line. So I hope you all can see the horizontal blue color line. Perfect. So, the reason people use MACD is like, whenever price, please focus on my mouse, whenever price cross above, above, this is the histogram, a histogram, and these are moving averages, the same moving average that I was talking to you before. But in this, you have two moving averages, and they are going zigzag all across. So when price generally comes to the positive aspect, when it starts to turn green in color and the moving averages start to shift above, people expect the price to be bullish. uh, like I'm talking of this area, right? You can see the vertical line. So prices start to move bullish, and when the prices go below, when you can see the color denomination as red. So when the moving averages go below, and the histogram is also red, people think, okay, now it is time to sell. And you will notice, please notice, and please be aware that these will be happening, at times. Prices are going to follow exactly what the indicator is telling. But if I put it currently at where the current price is, will it follow exactly the same thing all the time? Not necessarily. They're going to have their own movements, correct? It might go with the flow, it might not go with the flow. It's based on probability. So many people use this kind of indicator. There are many, 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 many indicators, out there, and it is up to you, correct? Because everyone to their own. Here, I'm just trying to, get to your attention, or get to make you aware that yes, some people just look at candlesticks, some people look at what you call indicators, some people use they want to combine the two, so they will look at candlesticks and indicators. The list is never ending. There is so much that you are offered. Sometimes when there's so much to offer, it's like you go to a restaurant or a buffet and you want to eat, but because there is so much to eat, you forget what and where to start from, and then you think that why am I eating also, correct? So it's the same thing with financial trading. There are so many products out there, there are so many indicators out there, there's so much of things happening, and that is good because it leads to diversification, expansion of the markets. More people understand, or more people get attracted to these markets, and they are like, yes, there's so much that we can do in the financial market. So today my main focus was just to kind of get you hooked onto it, hooked onto the way I'm explaining things. Yes, I am aware, and I'm sorry for any of those experienced traders, but I had to make sure to keep it short, simple, and crisp because it is important. I prefer to walk slowly and then increase my momentum. I prefer not to run or sprint right at the beginning, because if I do that, many of you will be like writing in the chat box, in the comment box, Harsh, what are you talking about? I've never heard these terms in my life. So I just want to make sure that, I like catching people's hands and taking them together, right? I don't just want to rush forward. So like this, there are many terminologies, many things to talk about. I mean, trading you. I'm very sure. Each one of you, even if you have a little bit of experience, you would be very aware that of the platform trading you, because this is the most widely used platform for technical analysis. Correct? Like I had shown you, if I would just show you on the web page, like we were talking about screener, for example, in our last two live stream. Screener, it just shows a line. A line is, it doesn't provide you with too much of information. It just provides you, but this particular website provides you with all the fundamental information. Whichever share, whichever stock or index of the Indian market, this website is one of the most beneficial and useful websites that you can be using. So please remember the name. It's called as Screener, www.screener.in. All right. Now, this particular website, the reason I'm getting it back to your attention is this website focuses more on the fundamental aspects, what the charts, what the books are telling, what the ratios are telling, what are the quarterly results, what are the profit and loss, what is the balance sheet talking about, for the last, maybe from whatever the number of years you can go through it, correct? So from 2024 you're going back all the way till 2014, so plus minus a decade. But these numbers, it's like for people who love numbers and who love to number crunch, this is the website for you. But when we talk about technical analysis, correct? For technical analysis, this is the go-to application called TradingView. I'm very much sure majority of you would be very well aware about it. But to those minorities who don't understand, TradingView is the app, right? TRA. Just let me type it for you. One second. Yeah, TRADINGVIEU, right? Now you just put www on top in front of it and put com.com at the end, so you are aware about it. And this is what people should be, aware. www.tradingview.com. So this is the backbone, for people like us, who are into technical analysis. We use this website, for all sorts of analysis, for all sorts of financial instruments, whether you're looking at gold, whether you're looking at oil, whether you're looking at Sensex, whether you're looking at Nifty 50, whether you're looking at Vodafone, whether you're looking at Reliance, whether you're looking at, the list goes on and on, correct? So, I hope you all had a basic understanding. I tried to keep it as what you call as simple as possible, so people could understand and learn from, or get a gist about how things are functioning. Why, and there's just to get a hang of how things function, how to get into a hang. And I always, I keep insisting on this particular quote, slow and steady wins the race. Yes, we want to make money. We will make money. There's no doubt in that. But you just have to be clear about that. You have to make money, but you have to get your, your bases correct. You need to get your bases strong, correct? So money will be provided, as in we are going to provide you trade ideas. We have a very good team of analysts over here. We will be sending you trade stocks during the market hours, during the Indian stock market hours. Once the market closes, our main focus comes on to explaining the technical aspects, right? The backbone of technical trading. So we are going to keep continuing. Please remember, and let me share it to you again, that screenshot of this, and we're going to be here every day for 5 days a week, right? From Monday to Friday, Monday, Tuesday, Wednesday, Thursday, Friday. So I hope you all had a good amount of understanding, and I hope I have done justice in explaining, and I'm trying my best, to the best of my capabilities, to make sure that I can keep it as simple, as basic, and as interactive as possible. Because there are so many professors and teachers around, but there are very few who can connect to you at a deeper level, right? And I want to be one of them. So I hope you had a great time over here, and I hope you all have a lovely evening. All right, until next time, take care. Peace out.